Alright, good morning. Let's go over today's trade plan. So in the overnight session, we saw that responsive sellers were more active and pushed ES all the way down to 66, where the market found responsive buyers, and since then we've been more or less range bound. But one thing that comes out of this is that theme of a very two-sided market and a market with no directional conviction, that theme is still in play. And ideally, if the market was really strong, it would have held above the Friday breakout area, which is 70.5 to 71.5. The fact that we had to push all the way down towards the prior VPOC, tells you that this is still more or less a balanced market, and it's having to push lower into support zones in order to find buyers. It's not getting any aggressive buyers at the breakout areas or at the aggressive support spots. So it doesn't mean that the market is necessarily very weak and sellers are in control, but it tells you that bias is still neutral, and we're still in more of a balanced market, and overall we're still stuck in a larger range. So we can still get buyers at support and sellers at resistance, and this is not a one-sided market just yet. So heading into the open, our bias is very neutral. We have to be open to a move in either direction. In this type of market where there's really no conviction one way or the other, you can really get hurt by focusing on just one side, and especially getting stuck on that one side, despite the signs that you might be seeing in real time. So it's good to be prepared, but when the market's two-sided and it doesn't have any directional conviction, you have to pay more attention to what's happening in real time after the open, and be willing to adjust and adapt. So right off the open, we're going to be watching 70.5 to 71.5. That's essentially the breakout area from Friday, and if we can hold above it, it tells us that short term, there is some strength in this market and we could be heading higher. So it can almost serve as a very short-term bull-bear zone right off the open. And which way we're trading, on which side we're trading of that zone, can give you an indication of which side is being more dominant. If you're holding below it, then the sellers are being more dominant, and holding above it would tell you that there's some strength on the upside, and perhaps, we're going to fill the gap at this point at 74.75. So we have that pre-market resistance zone, 73.75 to 75.75, a very key spot for upside continuation. Heading into it, the internals, ideally you want them to be at least trending towards the upside, right? Making some decent gains. Because the previous close is 74.75, the AD lines are probably going to be somewhere around zero heading into that zone. But if they're showing you something out of the norm, for example, let's say we're heading towards gap fill, but the internals are still quite bearish, that would be a sign of weakness in the market, that there's not any broad market strength supporting an upside, breakout move or continuation move. So keep an eye on the advanced decline to just gauge the state of the market and how much strength or weakness we're seeing. And if it's showing some consistent gains to the upside, then perhaps we can break out above pre-market resistance, test the overnight high, and then ideally go up to 80.75 to 82.75. So the short-term inflection point is pre-market resistance, but if we can break that and start heading higher, then the next key inflection point is the initial resistance zone, 80.75 to 82.75, followed by the gap fill at 85.25. Now, because we're still in this balanced type market, two-sided market, we can still expect responsive sellers to be active on first test of initial resistance and the 85.25 gap. Now, as far as shorting those areas, that's something that will be determined in real time. As long as we're not in a trending type environment, or there's not strong momentum to the upside, we can still consider taking a short at those zones. But on the day time frame, I'm going to be, if I am shorting that zone, I'm going to be looking for more of a rotational type move, not necessarily an all-out failure, because heading into it, buyers would have to be dominant by default if we're heading all the way up to initial resistance or the gap fill. 85.25 I think has better odds of putting in a better rotation. initial resistance, since it would be right above the overnight high. Unless the internals are quite mediocre, you might not get as big of a response at that zone. So it could serve as a profit target rather than a spot to fade and short the market. But again, that's something that's better determined in real time. But we do expect some selling at that zone and at least a rotational type movement. Now, on the downside, the 66-68 initial support zone, it's a key spot for buyers, but we have to keep in mind that it has been thoroughly tested on Friday and in the overnight session. So if this market is really going to have an upside move, then ideally you don't want to see it heading all the way down to initial support. Ideally you want to see it holding the 70.5 to 71.5 area and just heading higher from here, because the zone's been so well tested in the overnight session. So at this point, if we head down there, we are going to be cautious on the long side because the zone's been tested several times, and at this point you might not get as much of a reaction. Now it is still a valid zone, and in real time, if we see that the internals are not that bearish or there's not a lot of momentum on the downside, it's still a spot where we can consider taking a long setup, but it needs to be assessed in real time. It's not like this automatic fade zone. Because at this point, if it breaks, it would just confirm the overnight sell side momentum, and then we could head lower. 64.5 is really the last spot. It's the bull bear line in sand. It's the major HVN within this balance, and if we break that, that would just confirm the shift over to the sellers, and then we could go lower, test 59 to 61, which is the recent lows, and perhaps get some rotation there, but it could trigger liquidation as well. We'll just have to keep an eye on the relative volume, look at how bad the internals are shaping up to be, and then figure out, hey, is the market in real time telling us that there's potential for a liquidation move? Because we've been trying to break lower for quite some time, and so far we haven't been able to do it, but that doesn't mean that it can't happen at this point, right? We have to be prepared. So if you start breaking initial support, breaking 64.5, then you have to be careful on any long setups below 64.5, unless the day is shaping up to be very balanced, where the internals are very balanced, like minus 200 on the S&P advanced decline, maybe minus 700 or 800 on the NYSE advanced decline, then perhaps you can still take fade setups. But if there's high momentum and the internals are just tanking to the downside and showing some extreme readings, then we could still get a balance breakdown, and we could still head lower and test the support zone at 53.25 to 55.25, and potentially even lower, right? So the only thing that doesn't support that idea today is that we don't really have any major catalyst. There's really nothing on the econ calendar that can trigger that kind of movement. But when you've been stuck in a range and balancing in a range, then a lot of times you don't need a catalyst. It can come kind of unexpectedly. The move can just happen just because so much activity has already taken place, and the support zones have already been tested thoroughly. And at this point, when you finally go, anyone who's in a long position basically gets stopped out, or at least on the smaller time frames gets stopped out, and we start heading lower. So right now, as you can tell, heading into the morning, heading into the open, it's a very neutral stance. Not really forcing any view on this market because it has been very two-sided. And if you're stuck on a view, whether it's on the long side or short side, that can cost you. So in this type of market, important to be flexible, open-minded, not really get locked into one side. If intraday even there happens to be a shift from one direction to the other, just be open to that. Because right now we're just stuck in a range. There's really no single side that's very dominant right now. Overnight we've seen that the sell side's dominant. Bigger picture, we know that we've rejected the support zone several times, and we could be heading back up to 80.75 to 82.75, or the gap fill at 85.25. So either of these scenarios can play out. We'll just have to see which side the market's leaning on after the open, and we'll have to see if the overnight session, the sell side momentum we've seen, if that can be reversed. So far, I think the buyers are holding it relatively well, and there's still potential that if we can just hold here and continue to hold 70.5 to 71.5, then we could test some higher prices. We've tested for buyers at the support zones and found them on basically every test. So based on that, if we can now hold Friday's breakout, we'll probably have to head up to 80.75 to 82.75 to find some sellers in this market, and then we can just balance within a range. So those are the main thoughts heading into the open. Neutral bias, slightly bullish if we can hold the breakout, and if then the buyers can step in at the breakout area, we can see some higher prices. Volumes looking okay so far. It's been declining a bit, but still decent levels on the relative volume, so we could still get an okay range on the day time frame. No major catalyst for a big move in either direction. So let's just keep all that stuff in mind, see where ES is trading in relation to Friday's breakout, and then take it from there.